Hello, welcome to the Business Standard Banking Show. Tamal and Madan, thanks for coming on the show. Tamal, I'll start with you. In your column this week, you explained the reasons for both the 50 basis point and 35 basis point hike in the coming meeting. What is your take? Has your forecast changed from the 35 basis point you were expecting earlier?
No, no. I would stick to 50 bips. In fact, I would not be hugely surprised if RBI goes for even 60 bips and make it rounded figure 6%, provided RBI decides to give a forecast, the way ahead, very clearly that we have reached a milestone and now change the policy stance from neutral. Now from here it can go either way. So that's why I would believe it's at least 50 basis point is the order of the day. And the reasons are fairly simple. While inflation will definitely be within the RBI estimate. And the big positive point is the crude price going down. But the bigger elephant in the room is currency depreciation.
Now, Madan, I've been reading your reports. The last few focused on currency and T-bill yields. What are your expectations of a rate hike, and would RBI change its stance from accommodative?
Actually, Ishan, before the Federal Reserve came up with a policy, I would have pitched for a 25 or a 35 basis points increase in interest rates. The reason being that the signal which is sent from monetary policy is important. If you went in for an aggressive rate hike, it would have meant that the RBI feels that the worst of inflation is not over. Now, going by the commentary of the governor and some of the deputy governors in different fora, we saw that they felt that the 7% inflation was probably the worst. And that's the reason why I would have felt that 25 to 35 basis points was appropriate. But now, given the fact that the Federal Reserve has given a rather aggressive future outlook, and the fact that there has been reverberations in the currency market, I would now change my stance and say that, look, the RBI would probably go in for a 50 basis points increase in interest rates. Now, in terms of the stance, I think definitely there would be a change because they were talking of withdrawal of accommodation, which probably is not really relevant today because we are already in the situation of maybe sometimes a deficit liquidity. But I think the stance will probably be changed to neutral.
Would you go as far as saying it can go above 50 basis point, as Tamal pointed out?
So probably not in this particular policy, but earlier we felt that maybe the terminal point could be 6. But now today, if you look at the OIS rates, the 1-year rates or the 9 months down, it looks as if it could be over 6.5%. So we could probably be thinking of another 25 basis points increase in the next policy. But probably they would stick at 50 because anything more could probably rattle the markets.
Tamal, coming back to you, one of the interesting aspects that I found in your column this week was the estimate for the growth. You said RBI may revise its estimate downward from 7.2%. Do you expect inflation estimates to remain the same given what has been happening? Can you explain your rationale for that?
No, inflation, I would like to believe RBI would not change it. Whatever advantage we are getting out of crude prices coming down has been largely offset by food inflation, rising food inflation, and also because of currency depreciation, imported inflation. As far as growth is concerned, 7.2 has been RBI growth, and you see everybody and his uncle has been cutting the growth rate. All multilateral agencies, global raters. So I'll not be surprised if RBI brings it down to 7%.
So I don't really think that prices are going to come down. I mean, prices will continue to increase. Yes, a statistical effect could probably ensure that the numbers could at times come closer towards 6%, other times around 7%. But I think 6.5% to 7% range of inflation is something which we could expect for the rest of the year. And intrinsically, I think an economy like India is one which would always inflation above 5.5%. Now, we have this magic figure of 4%, which the MPC has agreed to. And I've always thought that it's quite fascinating how we came to this number of 4%, because when the MPC decided on targeting 4%, if one looked back the previous 10 years at that point of time, in 8 of the 10 years, we had about 6% inflation. Now, it was quite fortuitous that once the MPC rules came into being, I think we had inflation in the region of 4% for a couple of years. And we probably thought that Indian economy is also like your developed economies where you could have inflation of 3-4%. To my mind, it's just not possible because lots of these inflation numbers are being, I would say, regulated. Like even, for example, crude oil price coming down, we will continue to pay the same amount for petrol and and diesel. So I don't see those prices actually getting moderated. Maybe the OMCs and the government will keep sharing the burden or the benefits, whichever way it comes through. But the CPI per se will not get affected.
Now, as we were discussing this, one of the things that has happened is that rupee has slipped below 81. Right. Are we looking at 82 or 83 as the new normal? And can RBI keep on selling dollars to protect the rupee? What do you think, Tamal?
Well, first question is, what's the big deal about 80? I don't understand why you were so obsessed with the. I can imagine I would not love to cross 80 because I'll be tottering old man. But for a currency, you have to respect. You have to respect the market. I mean, this is not a reflection of Indian economy. Rupee is depreciating on a depreciation mode because of US dollar is gaining strength. If you look at Reserve Bank of India monthly bulletin, in the last monthly bulletin, the state of economy talks about rupee. The current currency reserve is equal to 9 months import, which was much higher in the past. I mean, in the recent past.
Yeah.
So I think it's good to allow rupee to find its own level. What will be the ideal level? Nobody knows. But I would like to believe it will be anywhere between 80 and 82 over the next few months.
Tamal, Madan, Tamal raised a very interesting point about the import cover. How much of an import cover can we afford at this time?
If we're talking of an import cover, I think there is some thumb rule which says that 4 months, anything less than 4 months is dangerous. Anything above that is good. At one time we had 12, 14 months. Now probably it's 7, 8 months. But actually, I would like to respond to what Tamal said, what's so sacrosanct about 80? Because unfortunately, the way the market behaves is that they always have these marks saying, 79 for a long time was considered to be a psychological mark and it became 80, now it's 81, it's 82. But I say it's a market sentiment. I mean, there's no rationale for it. It could also be 90, it could be 80, but that's how it goes. Now, the situation has actually changed significantly in the last 6 months. Second, if you look at the fundamentals, I think they have been weakening. I think the critical role will be as to what the RBI does. Now, as Tamal said that, okay, $90 billion have already been spent. How much more can we keep dipping into our forex kitty continuously? But this, I think, is a tough call for the central bank. And I think it's not a nice position. Because if the central bank doesn't do anything, the market assumes that the RBI is happy with 81, it'll go down to 82. Because if I'm an exporter, I feel that could go to 83, so let me not bring back my earnings. If I'm an importer, I'm going to be panicky, I'm going to rush into the market, and this itself will exacerbate the demand and supply for dollars, and that will drive the rupee downwards. So to my mind, we have crossed 81. I think 81 seems to be fairly acceptable to the RBI, so there won't be too much of intervention. Probably 81, 82 seems to be the range, at least for this week. We'll have to see what the RBI does on Friday. I think that could probably be a turning point in terms of not just what it does in terms of policy, but also in terms of commentary about how important or how critical it feels the forex piece falls in place when the MPC has its deliberations.
Tamal, Madan has raised an important point about the basket of currencies. Now, when we talk about basket of currencies, one thing that comes to my mind is the real effective exchange rate, and you've written about it before. The REIR, as I look at it at a 2021 with the trade-weighted basket, is about 102. Is that the right rate to deal at, or would it be at 108 or 110?
No, on RE basis, despite coming to this level, I think rupee is still overvalued. I have not calculated in the last couple of days, but I guess it's still overvalued. So what we need to do is, and as I said, till 21st September, all the emerging market currencies and all our trade partners, their currencies have fallen much more than rupee. And rupee, since September 21st, has fallen to 2% plus, which is more than the others, which is probably, covering the lost ground in an inverse way.
What are your expectations for December? Where do we see ourselves in December now?
If 50 bips hike now, which takes it to 5.9, and we could expect, depending on the external situation, another 25 basis point. Certainly, this is not the end. What's the terminal rate? Is this 6.25, 6.5? It could be anywhere between that.
Madan, over to you. What's the forecast for December now?
I think for December, there'll be another 25 basis points increase in interest rates, because I think another factor which has come up, I think, in the deliberations is about this concept of having a positive real interest rate.
Thank you. Thanks a lot, gentlemen, for being on the show. We hope to have you back again soon. Thank you.
Pleasure being here.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.